I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's FinTech and FinReg news. Now, it's been a little bit of a slow month because of some geopolitical events going on across the globe that have meant the focus is less on financial markets, on more on other things that are going on. But that hasn't meant that nothing has been going on. In the US, we have seen some moves by the SEC and the CFTC to add more bodies to their ranks. As we know that they've been relatively short-handed over the last 12 to 16 months. And they are now adding more and more staff members, including a new Director of Enforcement at the SEC, which is being welcomed by many. The SEC also announced that it has, in the last year, had a drop of about 20% in the number of enforcement actions it has been taking against industry participants. Now, this is all part of the SEC's plan and something that Chair Paul Atkins has been talking about right-sizing its enforcement and not going after as many cases as the previous SEC, mainly within the sphere of crypto and digital assets, where there have been lots of actions pursued by the previous SEC under the chair of Gary Gensler. So it's interesting to see that drop. Whether that will change behaviours, will that have a positive or negative impact on behaviours if in the market overall, it remains to be seen. Definitely an interesting development, though. The SEC has also been talking up its proposals to reduce the number of reporting requirements for move from quarterly reporting to every two times a year for biannual reporting for corporates, which would change information available to US equity shareholders, for example. So that would be a very big change around the topic of corporate governance. I think I've mentioned it before, but it's definitely a proposal that has not gone down well with some of the investor protection groups out there who are keen to see a revision of it and a reprisal of the quarterly reporting or a continuance of the quarterly reporting. But definitely something that the SEC has been pushing for a little while now. So we also have seen the CFTC taking some of the states into court battles regarding its ownership of the topic of prediction markets or regulation of prediction markets, I should say. So definitely a lot of interesting developments there. On the SEC front, they're actually handing power back to the individual states on the topic of corporate governance, which is another interesting development. So definitely a lot to be reviewed at the federal and state level with regards to FinReg in the US in the coming months. There has also been a lot of global discussion, not just in the US, but in many other markets related to both private equity and private credit and the impact of a slowdown in both of those sectors on financial stability, and also the retailization of some of those markets as well has been a topic of discussion. So on opposing sides, definitely some interesting review of the risks involved in those markets and the potential impact of a retail investor base being granted access to those markets. What would that do? So definitely something I mentioned last month, I should say, but a continuation of that topic, and it's to be expected throughout the year. There's going to be more discussions about it within, in particular, the SEC's area. They're going to be hosting a few roundtables on that topic they've already talked about, first of which will be on private credit. So definitely something to watch in the upcoming weeks. Another big topic this month has been the operational resilience topic, as usual. There's been a few regulatory discussions on this topic. One in the UK with the FCA putting out its review of what it thinks the financial institutions in its jurisdiction have been doing with regards to its rules and requirements that came into force last year, how much progress has been made towards different market practices it recommended, as well as some of the changing regulations there. Some room to grow, it would seem, from the perspective of the FCA. Lots of things around the need for more stress testing of these resilience plans, particularly with sort of worst case scenarios, Also, discussion about the need for more planning when it comes to communications, particularly if your communication channels got compromised, depending on the type of operational resilience event. It could be a cybersecurity incident where normal communication lines are down or insecure. So definitely a lot of food for thought from the FCA. And on the other side of the globe, we've seen ASIC, the Australian securities regulator, issue its final report on the ASX and its operational resilience. Now, it's something that has been ongoing. We've been hearing a lot of discussions about this since 2022, I think it was, that we got the first proper report from ASIC, and then they took subsequent actions, including a lawsuit against ASX with regards to the chess project, the chess replacement project, which was initially related to DLT, now is more a traditional technology project. But definitely a warning to the FMIs of the financial market infrastructures across the globe about how seriously regulators are taking operational resilience and the need to address governance when it comes to projects, plans. And many FMIs at the moment are in the midst of very, very major projects with regards to changing their core technologies in a similar manner to ASX. So I'm sure the world's FMIs have been looking at this project and heeding it as a warning for what not to do, almost from the regulatory perspective, needing to be as transparent as possible, needing to be as honest as possible with regards to progress, and also addressing any operational resilience failures as and when they arise as quickly as possible. Definitely those kinds of takeaways are important to bear in mind here. And my final thoughts for the month definitely relate to the last topic I mentioned there, operational resilience. Now, given the geopolitical situation we're currently in, and we have no idea how long that's going to last for, and there are obviously multiple conflicts across the globe, so it's not just one single event, we have seen lots of European and US regulators warning about heightened cybersecurity risk to financial services firms and to financial market infrastructures. Definitely, it's top of the list of risks for this year, as highlighted by the recent Trends, Risks and Vulnerabilities report published by the European Securities and Markets Authority. It had a very red across the board focus on the number of attacks that are going against EU financial institutions, for example. There's been a definite increase over recent months, and they are keeping a very close eye on the resilience of the markets. As a result of that, we can expect that that's going to continue to be a problem. We've also got that rising threat of quantum computing that I've mentioned so many times in editorials over the last couple of years. Definitely something else that regulators are keeping a close eye on. It will be interesting to see how much progress the Monetary Authority of Singapore led initiative around quantum security will progress this year as well. So definitely a lot of technology topics that are worrying financial institutions. Definitely something to think about. And for the future, how quickly will we see quantum computing come to scale? We don't yet know, but we can certainly say there's been a lot of money thrown at it over the last 12 months by regulators, governments, probably cyber criminals, unfortunately, but also financial institutions. We can also expect to see more public examples of where it's being used for good rather than bad, hopefully, by financial institutions to improve calculations and also look at sort of things like stress testing and risk management. So definitely some positives as well as negatives when it comes to that technology.